Hello, I'm Florian, founder of Evident, and I'm here today to share with you a perspective on how Web3 is changing investing into alternative assets and actually also investing into impact assets. We're really looking at a phase of opening up of this entire space in the coming years to more investors and to see more capital being channeled to worthy, to impactful assets. I'm going to use my company Evident as an example. Evident is an investment platform for alternative assets with a positive impact to also illustrate to you how Web3 actually can be applied and how we're moving beyond just the innovation, the speculation into real-world applications, in our case, in alternative assets. So if you look at how things are evolving in the 2020s, we can say it's really a new era in alternative investing, alternative assets. And there are four drivers behind that. The first one is a powerful one. Beliefs are changing. Belief systems are shifting. And we are now, all of us, completely digital, completely remote in our work. But that also flows into other areas. That also flows into how people invest. So digital is the new normal, and you have to be digital first and mobile first, also in the world of investing. The second change driver is adoption. We see a growing demand and in fact an exploding demand for alternative investing and at the same time for investing into impactful assets. The third driver is regulatory changes. Yes, regulatory innovation is always behind tech innovation, business model innovation, but we see the change already. We have seen the change gradually in the adoption of alternatives, in the adoption of now digital assets, crypto assets in the regulatory frameworks. And more importantly, we see the commitment of countries and regulators to this new asset class. And that opens up the field to different business models and, in fact, new businesses that we see emerge based on that. The final driver, the fourth driver, is technology. We've seen this now for more than 10 years since the origin innovation of blockchain in Bitcoin, now to a very wide field of Web3 applications, of what we can look at as the next iteration of the internet, and that being applied or opening the possibility of being applied to very traditional sectors, including alternatives. So I want to focus in on one of these four drivers, and that's really how people want to invest their money and how people specifically want their money to make a difference. If you take a few steps back and we look at the current situation today, we have many challenges, probably more than we've had in the history of humankind. We're looking at climate change as, for example, one massive factor. And these challenging times require visionary solutions. They require new solutions that we're not even thinking about. And to develop these visionary solutions, to actually be able to come up with ideas and test them and fail and then try again, requires risk capital. So we will need a lot more capital to actually solve the challenges that we're looking at. And this is, I think, a hallmark of our time, and this is what we're looking at over the next decades ahead. And that will run across various sectors, from the startup world to everything that has to do with renewable energy, infrastructure, education. There is a massive capital gap and capital need, but also an investment opportunity. And that leads me to looking at the two sides of this equation, the investment opportunities and the investors. Modern investing has to be both. It has to be for profit and pro value. Let's dissect that. Let's first look at impact. Impact needs capital, as I just pointed out. And to double click on that point, there is a $3.7 trillion annual funding gap for us to have a chance to reach our UN SDGs, the Sustainable Development Goals of the United Nations, by 2030. And I think it's fair to say that we are not even close to achieving that funding that is required. So it is questionable if we reach the Sustainable Development Goals. trillions of US dollars are required for us to progress meaningfully on that front. Second, we all know ESG is a debated term. Greenwashing is a big problem. So we've seen this topic evolve in institutions, and we look at the situation today and it's far from satisfying in terms of real impact. And finally, if you look at the flip side of this, also to expand on what I said earlier, solving some of these hard problems, for example, decarbonizing the global economy, present the investment opportunities of our lifetime. If you think about where to put your money today, investing them into people and companies who try to solve these really significant problems are the investment opportunities you want to look at and you want to put your money behind. So that's the impact side. Then, of course, you have the investors, and investors seek purpose. That's increasingly true, but especially true of the next generation of investors, of millennials and Gen Z. They want their money to make a difference. They want to support projects and people and companies who make a difference and who try to change the world for the better. It's a very significant change we're seeing in investment behavior, and that will only get stronger over time. And let's not forget, this young group of investors, they are now starting to make money that allows them to invest meaningfully. And maybe more critically, they stand to inherit trillions of US dollars. And so they will both be decision makers, but also have capital to invest. And their mindset of investing is really different. What also is true is for this generation is they want to have a more direct connection to what they invest in. Alternatives is one way of achieving that. And that allows these investors to behave in different ways, to have a stronger bond to what they put their money in, to really have engagement with that asset. And you also see that in the professional investor world, in institutional investors. LPs, for example, they are evolving to want to have a stronger say, take a more active role in investing into funds, for example. So these two sides evolving in their own way. And actually, if you look at it from a very generic level, everything is great. We have more demand for capital, we have more supply for impact investing, but it's not quite as straightforward, because the challenge we're seeing is these two sides, the founders and assets and the investors, they don't really connect very well, because direct investing in alternative assets has not arrived in a digital age. We're looking at this 10 trillion US dollar private market sector, and it hasn't really changed in terms of its inner working for 70 years. The main problem are actually outdated processes that underpinning the alternative investments world. And you and I and we all are very aware, and we're all dealing with these challenges and outdated processes on a daily basis. So if we categorize them, it's really four things. The first one, it makes the entire space exclusive. Because of the inefficiencies we're looking at, we have high investment minimums, and maybe even more than that, you need to know the right people to get access. A lot of my personal investing into startups and other things actually happen on private chat groups, for example. So access is not really there. Second, once you're investing, it's all very inefficient. It's paper-based, it's manual, it's overhead-heavy, and it's expensive. And that connects, of course, to the other problems. So we haven't really seen a real involvement and a real reinvention of the processes. And with reinvention, I mean going beyond saying, oh, let's move from paper to PDF. That's not really reinventing. That's, chipping away at small efficiencies, but we need to see a reinvention of processes to be really efficient. The third challenge is the entire investment is illiquid. Usually you're stuck in a negative sense, or you hold your asset for years before you can exit and before there is a liquidity event of some sort. And that, of course, also changes investment behaviors. That limits how I can risk manage my position. That limits how I can maybe get some liquidity, put it into other things. So in short, it restrains my active involvement and my active repositioning of my portfolio in alternatives over time. Finally, investing into alts is unengaging as it is today. Especially for younger people, there are definitely more interesting things than putting your money into a type of black box, a fund structure, a PE, a VC fund. That is that is well as a bedrock of investing and works well for them. But there has to be more. There has to be stronger engagement, stronger connection to the asset, some way of learning something from investing. We see this in our research very strongly. And again, a challenge today is, investing into alternatives is not really engaging. So we at Evident, we are here to solve this. We look at these problems and we fundamentally want to solve them. So I want to run you through a little bit of what we do and how we do it to illustrate different ways of dealing in alternatives. So as I mentioned, Evident is an investment platform for alternative assets with a positive impact. So we exclusively deal in assets that we feel change the world to the better. And what we're very focused on as a platform and as a technology product is actually connecting humans. We are connecting the founders with the investors. And our platform as a marketplace wouldn't work if we don't bring benefits to both sides. So for founders, we help them realize their specific vision of how a better world looks like. We help them take the risks they need to take to truly innovate. For investors, on the other hand, we allow them to get direct exposure to businesses that create that next generation of wealth and impact, to businesses that work on something that's meaningful for the investor specifically, because it's a very individual thing. And both sides benefit from this complete transparency and new approach in investing. That's really at the core of what we do at Evident. And we are very focused on a few things to make this work. And actually, we know we have to be very focused and do these things on a world-class level to have a chance of providing value. First, we go out and we scout. We find world-class assets. We find exciting, impactful startups. For example, we find interesting infrastructure investments. And for that, we heavily tap into our existing network of investors. We use this across our internal team. We work with scouts and with others and lean on our relationships to get early access to this type of assets. And to some extent, doing things differently also helps us get access, because founders that work on interesting things are also interested in new ways of fundraising and new partners that they can work together with, and that has helped us to get early access. Second, we tokenize these assets. We invested heavily for years into the legal innovation and the technology innovation to really be able to structure the asset and issue it in digital format in a way that complies with and fits into our well-established existing regulatory and legal frameworks. So compliance was the top of mind. And if I look at just raw innovation, that is probably the most important part for us, because that allows us to lift this entire process on a digital level. And the tokenization step, getting it right, is critical. If you don't have legal enforceability of the assets that you create, or you're not able for them to exist within established frameworks, your platform, your model just doesn't work. Third, once assets are on the platform, we allow investing and trading. Here, we build the platform from the ground up on blockchain. We're working on the Algorand blockchain, which, by the way, is carbon neutral. So this allows us to present a very efficient peer-to-peer transaction of shares in anything, essentially, based on our tokenization approach. And that also allows us to take a step out of just being a marketplace, just being an exchange, and be very focused on the assets and on making them accessible and allowing investors to transact in these assets and units directly between them with minimal or actually non-existing settlement risk, since these two parties are technically connected directly on blockchain and by leveraging smart contracts to make this work. Finally, engagement. We apply this philosophy, strategy, the technology of Web3, the principles really to allow people to connect with the underlying asset. That can be voting, that can be other ways of getting connection. So those are the four things that we're very focused on and that I would also look at as differentiators. We have a lot of successful and great examples of digital platforms that open up this investment space into alternatives. I would consider them Web 2 versions. And we are from the ground up built as a Web3 alternative to that, doing these four things. Now, I want to go a bit deeper into what do we even mean with tokenization, asset digitalization. Asset digitalization is the creation of a digital representation of rights on blockchain. So we're using blockchain to record the rights of the parties involved. It's as simple but also as complex as this, and there's nothing more to it really. We're using established legal concepts. We just record them in a new format that is code, and that is also human readable format in the form of so-called Ricardian contracts. And as a result of that, you get what we call dApps, digital asset-backed securities. So as the word says, we consider these assets, of course, still being securities. They're completely digital and natively digital, very importantly. They're not some contract on PDF. They're natively digital in code. And of course, they're asset-backed. They're not Bitcoin. They're not some other crypto asset. They are backed by real-world assets. Digital asset-backed securities. That's what we're dealing in, what we create in this step of tokenization I mentioned. And how we do this, just very briefly, on a very high level to give you an idea. If you look at an asset and an asset owner behind this asset, that can be a founder, that can be a company that owns the asset, we will build and structure an SPV, a special purpose vehicle, that holds a portion of this asset. And the only job of this SPV and the reason to exist is to 100% hold a portion of this asset. We then tokenize the units in this SPV in the form of tokens on blockchain. And then on the Evident platform, finally, we allow investors to invest into these fund units that are represented in digital form in the form of tokens. So we still call these technically tokens, but for us, we're simply keeping a digital ledger on blockchain. That's all we do, really. And of course, once you're digital and once you're on the platform, you can do all the rest in completely digital format, from KYC and AML checks and onboarding, enforced and automated compliance, everything around custody, reporting, the engagement of investors. The entire process is digital once you take the structuring and digitalization steps first. So that allows us actually to combine the best of both worlds. Asset digitalization enables a hybrid approach, and that's very important. That is at the core where we bring in Web3 elements. And let's run through the elements of traditional funds that we're all aware of. Obviously, we get all these benefits. These are established and flexible structures. They're established in the market. People understand them. There are ecosystems around established SPV structures, for example, from auditors to legal firms that support this and others. And so you can build a structure fully compliant, of course, with existing laws and regulations. And finally, you can set them up, importantly, in a tax-efficient manner, again, building on years and decades of experience. We don't have to reinvent anything. So we build on traditional structures, but we add these Web3 elements. So what are some of these Web3 benefits that we get from it? And again, it's a summary, but the main things are really, for example, we can build voting mechanisms right into this fund structure, completely automated, all running on the blockchain. We can make a secondary market, as I mentioned. We can build end-to-end truly digital processes, not improving, but reinventing the processes. That allows us to build a completely mobile-first, user-friendly platform, which is just not possible in a lot of ways if you follow the traditional approach. That allows us to build automated compliance, where it is not dependent on humans paying attention, but certain things are just automatically enforced, which gives us a much more compliant platform and setup overall. And finally, all of this is built, as I mentioned, on the carbon neutral Algorand blockchain. By today, it's actually carbon negative because of the use of carbon credits. So it all fits very nicely together as a technology system that brings these Web3 benefits, but also includes traditional elements. That's the Evident approach. So, of course, we have an end-to-end digital experience. As I just said, it goes from onboarding KYC to discovering assets on a marketplace, to doing due diligence in a digital data room, to looking at what is the current price of this asset, how can I make a trade, to all the way, managing your portfolio and engaging with the asset. For example, voting on certain things in the context of this asset. All of that on mobile, on desktop, completely digital. That, as a footnote, includes relatively boring things like reporting, but it's not a small deal. Investors have all this information always in one place. No more emails with PDFs attached or things coming in different formats at different channels. It's all on the platform. If I want to see an update, if I want to check the latest numbers, that's in the reporting section of my asset in my portfolio, and it's always there, and I can always go back in history. It works the same way for every asset. That just takes away a lot of that burden and overhead for investors as well. And again, these are small things we can enable with a natively digital process. So what do we actually have on the platform, and what do we do on the platform? Just a few examples. And of course, I'm happy to engage with you to discuss that in more detail. First, the asset we used as an example and that we started with is an LNG carrier, so a ship that moves around LNG, liquefied natural gas, across the world. And I really like this asset because the shipping industry is moving towards being more environmentally friendly, and using LNG as a source of power is a big step in that direction. And so investing into this climate-aligned ship actually invests into this future of shipping. At the same time, it's a very attractive asset, right? It's income-producing asset, creates cash flow every day that gets distributed to investors. And finally, what I like about these type of assets, I have the same investment exposure and outcome like the person and the company behind this asset that are professionals for decades, in this case in the shipping industry, and don't make mistakes basically. So it's the same exposure that I get, that the professionals get from this industry, and I get access to this asset class in smaller amounts. So that's one example of assets that we can take, digitalize, and provide easy access to. Then of course there are others, and just to be on the other end of the spectrum in terms of types of assets, there are of course also intangible assets like carbon credits that can be digitalized and make investable, and so on and so forth. So pipeline is strongly growing, also with startups that are in the environmental space, that are in the recycling space. There's a lot of activity, and we want to help investors get access to these opportunities, but also channel more capital in this direction and allow these companies to really thrive and grow and do very well and add their part to a positive future. For us at Evident, in the end, investing is impact. So to summarize, we take Web3 approaches, we take Web3 technology to reinvent how investing into alternatives works, and to really build on this trend of impact investing, direct exposure to meaningful assets. And we'll be on this journey for a while. These are long-term, large and long cycle type of changes that we're looking at. If you have an interest in engaging with us and learning more, please reach out anytime. Thank you for your attention and for being here.